All right, guys, jump on. All right. Give everybody a minute to jump in. All right. Get yourselves in, guys. Welcome, everyone. Welcome, Matty. Okay. All right, guys, jump on. All right, guys, keep yourself jumping in. Okay. All right. I'm gonna start in 1 minute, and then we can go. Okay. All right. Okay, guys. So I'm gonna hit record. Let's go. All right. Keep jumping in. Yeah. We're live. All right. Okay, guys. So welcome to another live analysis session, our crypto analysis for the evening. All right. There's quite a lot to go through, so I'll be going through the technicals first, and we'll touch on the fundamentals. All right. So I'm gonna start off with our main, which is Bitcoin. I'll be looking into some stuff. So as we were discussing yesterday, so let's look at the price action to see where we are right now, and then we can move forward into what the price is going to do. So again, I'm going to start up from where we are right now. So when we got to this demand zone here, we had the body break beneath and the return. We've had a lot of price action here and a lot of accumulation here too. Okay, I think this has been the heaviest area of accumulation, but we haven't had the body close back above this order block. So since there's no body close above this order block, we're still short. However, we reach here now. So here's our main kind of pivotal point right now. Now we saw the price get down to 29,000. Okay, for a brief moment before the price spiked back up. And I said that, remember, now in terms of the market, beneath this low, we'll have a lot of pending orders, a lot of stop losses. This low right here from the crash, a lot of activity would have been going on. Retail traders and mainly specifically cryptocurrency robots, whether they're institutional levels or whichever. But underneath here, as I was saying yesterday, I would expect the price to reverse after taking this low. There would have been sell stop orders. Now, the dynamics of how the algorithm will work for crypto and forex is very similar, because the fundamentals about how the price will move will be based on money. If there's more money on the supply or demand side, we'll see different price action activity. So on the D1 here, I think this is the clearest view. So whenever I start, you know that I'll always be starting from the D1 daily time frame, because I like the way the price action looks, and it's very easy to kind of map out as to where we are. So where are we now? So after the price has taken this low, we had the obvious reversal. Now, because of this area right here, now this area in orange, for people who trade support and resistance, this was mapping out where most like retail trade activity will be. Now, I think we had a very good run here. The price created a support level, which is not what we trade, but because of how most traders trade, the price forming this area of support would make traders want to buy. And so I know there was a lot of buying activity. I'm sure, again, there was a lot of pending orders, whether they were from futures trades, futures market, or whether they were from just normal trades or just normal physical buying. We've had quite a few touches here. And this second one was the trigger, especially because it was lower than the low of the first crash that we've had. Now, for me, looking at the price action, we still need this 30K close with the body of the candle. We didn't get that yesterday. Rather, we've had the reversal. So I'm going to zoom in just a little bit here for us to look at the price action in more detail. Now, again, we can recap from what we were saying yesterday. When the price went long here, okay, we didn't have an efficiency fulfilled of this order block. So as I said, no matter what happens on the news, whatever they say, all right, the price was going to come back here and push for at least to fulfill efficiency, whatever the reason, whether the reason for them to cause the price to go short would have been the Chinese mining news, which is very real, and for the price to go long, whether it's with El Salvador and them accepting Bitcoin. So there's a whole load of dynamics there. Even with crypto news, a lot of it is in the same way as Forex is an excuse for the reason why more or less money will be moving in and out of the market. Okay. And so watching the price action that we have here, we're still in very good, well, I believe we're in a very good place to still continue for a short. So let's just do a quick recap here on the price action so we know where we are. Because once we get the price action for Bitcoin, then we can use it for many other cryptocurrencies. So if I push over for this demand zone here, so this demand zone on the D1, what we had yesterday, and we will look at yesterday's markings. The body of the candle closed beneath this area. So we had a break beneath demand and a reoptimization for supply. And then we've had a good short here. Now, as the price is broken beneath here, we have two things. First thing, this demand zone here, which is an important demand zone, as I was saying to you guys yesterday, because the price used this original area to go from where it was all the way up to, if you want to go back to the high that was, or the most significant high before we had the first crash, which is here. So since we've had that run of the high and then we've had the reverse, this demand zone becomes an important area of liquidity, an important buying area, and psychologically for traders will be a psychological price point that traders and algorithms will be using. Now, the cryptocurrency markets haven't been around as long as Forex by a long shot. The level of volume in the market is at least, orders of magnitude less, sometimes even 100 times less in terms of daily volume compared to Forex. With the daily activity or daily volume with crypto, always remember is in the billions, but Forex is in the trillions. But the same kind of principles apply. Volume doesn't move the market in Forex. Okay, liquidity does. With volume in when we're looking at cryptocurrency, it might have a better effect on the market. Okay, and I'll explain why I'm saying this. When we're looking at the volume, okay, of the price action here, many of the retail traders who are involved in crypto, because we're in a much smaller market, may have a better effects. And so in this case, the effect of volume might be a bit larger, but what really does move the market is never going to be volume, it's liquidity. The more money, as I showed you guys yesterday and at the beginning of this live session, just to recap over this one more time, because it will help us to have a good perspective on what we're doing. If I was to draw this again, so my famous seesaw from chapter number 2 of supply and demand in the WGA course. If I was to put this here, supply, all right, supply. And on the other side, we have demand. So I'll drop this up here. All right. So any market, no matter what money market is, whoever has the most buying power, whoever has the most say over what the market does is the person who has the most liquidity. Okay, it's never going to be the volume. From the Forex perspective, even if there's 1 million orders that come from, or there's 1 million orders, let's say, and they came from 99% came from retail traders, that 99% wouldn't have hardly any bearing on the market compared to the 1% of institutional orders, because the volumes will be the number of orders, the liquidity will be how much is there. So maybe if retail traders, all of them had one lot, okay, so that equals to, like, let's just call it 1 million lots. Okay, and then institutions, they had 10 orders, but each of their orders have 10 million lots each, for example. Then we know we're going to have a lot more market weight being pushed around by institutions than retail traders. And it's the same in crypto. Okay, algorithms are still active. Okay, they control about 80% of the market, and this is from figures from 2019. So why am I saying this? When we see these break beneath or these close beneath the major demand zones and returns and reoptimization, then we should be aware that even though the price has had this pullback, for most retail traders who trade patterns, this pattern right here is a reversal signature. We had a pin bar and the price should be going long, which is not wrong. But if we take into account where the liquidity is in the market, we've closed beneath quite a few major demand zones at the moment. The last one that we're at is at this 30K one. And if the body does close beneath here, no matter how many reversal signatures we get, the price will be going short because the money has tipped heavily on the supply side than the demand side. Okay. And, a true reversal that will actually take the market back to where we believe it's supposed to go would be when there's more liquidity on the demand side. This is why when we look at the Bitcoin dominance chart, we should look at it from a different perspective as we discussed again. And I'll go through it moving forward. So now we can safely say we have the next area. So I'm going to go through the rest. So we have two D1 validation points. There's one here at 37, and we have our other validation point here formed at 33,277. Now, right now, this day would be important. Now, I know it's become a cliche thing that this day is important. Well, every day in trading is important, but there are some days that are more important than others. All right. Today is important, I would say, definitely, because if we get a body close above this demand zone right here, then we still have a bit more demand in the market that we can use. And this demand zone will be reoptimized for its original use. If not, what I am really hoping for us to make a movement. Now, from the projections we had yesterday, the price spiked just a slightly or tad bit higher, which is okay. But I still did use the key supply zones that we're looking at. If we get a wick close at this high, so in other words, a stop point, a D1 stop point of the previous daily high, I am expecting the price to go heavily short from there. Okay, so I'm going to go to the H4 and then down to the H1, and let's have a look at what's going on. So let me quickly take away this arrow for us to have a look. Now, here we go. So one of the things that I did say is that I used the M30, but the H1 is the same. We had a very strong bit of injection of liquidity here, very strong selling in the middle of the day. And I was expecting the price to come back to that area, which it has done. And you can see that the price has created a small range or an accumulation range right around it. So let me delete all of this. So I'm intrigued to see what the price is going to do with that. Is the price going to continue going short from here, or we're going to get the long? Now, if I put this on the M30, then you see what I'm talking about. On the M30, we have a bear trap here. This is the bear trap I was talking about yesterday. And so from an algorithmic perspective, they did the long that was produced afterwards did capture bearish liquidity, but it seems as though now another thing that I didn't say, that when we see this bear trap happening, the price didn't capture enough bearish liquidity. We've left equal lows here. The price has accumulated on this area, spiked just above, and returned back here. So looking at the price action, for me, I still believe we're at a short point and we could go short from where we are. I said that the limit for us, if we were to take this sell yesterday, would have been this demand zone, because this demand zone is the last leg of the phase of this last institutional sponsorship. We had the break beneath and return at this candle here. And now the price has come slightly higher, but still stayed within here. And then we've had the large drop. So this reaction I'm seeing here with this large red candle, to me, gives us a good sign of what's going on. What I do want to see, however, before we take this trade is a better reversal signature. And I don't mind getting into this late. Now, we're not going to be trading Bitcoin. We're using Bitcoin just to, because of the market effect Bitcoin has, to be able to capture other cryptocurrencies. But we're still in range of where we are now. If the body of the candle does close above here on the M30, then we have more of a reversal in our hands, and we should be looking for higher targets for maybe the price to get back to these highs right here. But for now, from the grand scheme of things, the price hasn't done anything that's not surprising, especially after it's reacted in here and we have a very strong body close that engulfs the previous candle. Now, this is not candlestick patterns like that, but the engulfment of a bearish candle of a previous bullish one to this degree with a very strong close is a very good sign of where the liquidity is in the market at the moment, what direction liquidity is pushing towards, which is a short right now. So I'm watching to see how the price will behave here. Along with that, I'm coming up with better options as to how we can go forward. I would say we shouldn't move just now, but we should be prepared at any time, because as soon as the price gives us a great signaling, we should be going ready for a short. Now, at the moment, this is my kind of thesis here. So the supply zone right here is a M30 price cap. It's been capping the price for supply. We had a break above, and we've just had a return an hour and a half ago. If we get a reoptimization for this supply zone, this might be a safe enough area for us to just say, let's go short. Okay. It's at the D1 validation point, so there's nothing wrong with going for it, and then we can continue. As I said, beneath this low, because of what this low represent, there would be a liquidity pool, which is right here, and I'm expecting the price to go for it. So our next target after the price starts to push short, as we hope for, I'm expecting it to get to 29, then down to 27, then 25. Okay. Especially when we get down to around about here, 28. So either we can have one more reversal signature. It depends on what the price wants to do. If I was to use a trend line to explain this, I mean, the bullish structure we had here was strongly broken past. Once we had this very strong short, the price confirmed it again. We had a tiny supply zone, very strong here. So seeing this price action movement here gives me hope that the price structure is pushing towards the bearish side. But the biggest barrier at the moment is between 33 and this 32. If we get a body close on any M30 candle, then we can start to look for ourselves. And I'll suggest, as this pattern follows, that we should be looking for a short and a return. This may happen around 10. I've noticed that a lot of action happens around 10. So if we're going to find something, we may find it exactly around about here. So this is our pattern now. So if we translate this into the rest of the cryptocurrency, what do we have going on? So I'm going to pull up, okay, I have my charts here actually. If I pull Litecoin here, we can look at the similar things that has happened. So Litecoin, leaning off of what we said yesterday, I'm going to go from the D1 again. So Litecoin, I think, is a bit more obvious to us as to what direction the price wants to go to. We have had the body close. So yesterday we did get the body close beneath this significant demand zone, and we had the spike into this area. So the price ran this low, okay, triggered whatever orders here, whatever stop losses are arrested here, all gone. Okay. Now the price has stopped here. We have a D1 validation point that the price is struggling around, and I marked it off yesterday. I didn't use the horizontal line the same way. I just used the trend line in as straight as I could across here. All right. So a reaction in here where we have this clean body close, all we would need is the same kind of similar scenario, a stop punt of this high or some sort of reaction, H4 stop punt signature, and we can go for a short here. The first target will be back down to around about here. In our real target, which is the efficiency, the efficiency fulfilled of this price action movement here that was never filled back in November, would be our target of 63.82. All right, so we're looking for that sell 50% drop. Now, when I look at the price action here, it actually looks a lot cleaner as to what the price is doing here. Now, I didn't take the high of the day. The high of the day is actually at the beginning of the day, but I did take this high right here, but we still haven't had the high of the day taken. But I said to you guys that we have a validation point at around 134.003. And my demand zone area or supply zone is here. So this whole region right here was what we were looking for. Now, on Litecoin, it looks a little bit different. I'm going to take off this D1 area here just to make sure that I can assess the price a bit better, just to make sure we're on the right page here. So from what I'm seeing at the moment, okay, on the H1, the price did return to supply right here. I wish it would have taken the high, and I'm intrigued to see if there is the gap being filled or if it hasn't been filled yet. I think that this line I have here is actually not the high of the day, it's the last gap that hasn't been filled. Because I remember Marlon gave a shout that there was a gap that wasn't filled. Now, not every gap gets filled straight away, but it was quite close by and the price has come close to it. So I was really hoping to see that. So we should be getting ourselves prepared. It is not an easy waiting game sometimes to get to the chance and it's almost ready, then it starts to pull back again. But similar to what we have here on Bitcoin, with Litecoin, I would have liked to have seen the gap being filled. If the price chooses not to, it chooses not to. But I'm just going to put two scenarios here, okay? First scenario, quite simply, is the price pulls back here, fills the gap, and also does another stop punt of the previous daily high, which will be, well, tomorrow it does a stop punt of today's high, and then we go short. or we get a reoptimization somewhere. Let me go to the M30, okay, or the H1. Now in the H1, there's not as many zones as there were, or, as they were on the Bitcoin price action analysis that we just did. And so we'll have to probably go for a smaller entry, like a 5-minute one. So the closest demand zone I'm seeing is here. If we get a break beneath there, underneath it, there's quite a strong liquidity void and a tinier demand zone. But the body of the candle is not nested at the same area as the open. The close and the open are not at least equal. So this demand zone, I don't believe is that strong. This one is. We have that engulfment that I was talking about on the lesson the other day, which is a secret key for us to be able to get ahead when it comes to crypto. Okay, so I'm hoping that the price will do the similar thing, but we'll wait for Bitcoin. If Bitcoin starts to show signs of that short and that reoptimization of supply, then we can simply take Litecoin, because we can grab that effect on the market of the market, 50% drop I'm looking for personally. But then after, we can get better lot sizes, a lot lower risk, and very good reward. Okay, so this is the M5 projection here. So we're cutting it tight, but it depends on what happens at 10. Personally, it would be nicer to see another long go forth where the price does this spike here with a stop hunt. Gives us a bit more confidence to go for a long. I do see equal highs here. Okay, no matter what time frame you're in, equal highs have liquidity pools around them. Now, to assess how strong they are, it will take some technical analysis to do. But even if you cite one out, you want to make your suggestions, because there's many equal highs that get left for years. So you want to balance that out with what the main factor, what the main theme of the price is. So I'm hoping these runs get run and the price pulls back. That'll be a great signature for us, and then we can take our long from there. All right. Let's go and look at the rest of this. So Ripple. All right. So Ripple is come back to the first area here. So let me pull back to the M30 here. Ripple has a lot more different price action. It's starting to deviate away from how Bitcoin looks. It dropped it quite a lot more strongly than we'd expected. I told you already, guys, with what my beliefs were technically from Ripple when the price was here. I did say that this liquidity gap at 33 cents from the Reddit army is going to be filled. It is quite a large gap. It's visible on IC markets and is also visible on other platforms. I believe there is a CME gap. We can double check, but there is definitely a gap from the Reddit army. It's not the largest, but in a time like this, the market can find a way to do it. You have to remember, I said to you yesterday that many institutions who are talking about Bitcoin, talking about crypto and playing the game, certain companies, they may not actually have Bitcoin in their portfolio. They might be monetizing it and offering, I won't say any names, but they might be monetizing it right now and offering products of those services, but they may not even own any, because they understand the game very well. They've had a lot of these companies who have large amounts of money have had, at least what we call legacy finance, have at least had the opportunity to sit behind 2 generations of financial crashes and financial booms. Okay, a lot of these companies were around when the internet boom happened. They were already 60 years, 70 years established when that happened. So you can only imagine how much time they've had to be able to understand these kind of situations where, in essence, what they're trying to do is to get the masses distracted by a financial crash, scare them away from the market, and get the crypto cheap. Remember, the topology of cryptocurrency is very different. It's the first in history to be like this, and this is why Bitcoin, although it has its issues, is very scary to many people. Is that Bitcoin provides a freedom that people don't seem to really acknowledge. Why do I say that? Bitcoin, in the topology of who had ownership of a Bitcoin first, is the first asset that's been offered to people, where people who are not institutions had it before people who had it in the institutions. Institutions are trying to catch up now. So this whole bear market stuff is a good time. All of the scary things that are seeming to go on in China and everything like that is a very good time, not just for this Bitcoin, but for every crypto, for them to have a head start. The bull market happened too quickly for them. Many companies, I believe, feel like they've been left out and they want to get a piece of the pie. So what would be the wise thing to do? The wisest thing they can do is to put out what we call fear, uncertainty, and doubt. Scare everybody away, get everybody to sell. It's so crazy to me how everybody I'm meeting right now is asking me, should I sell? Should I put into USDT? What should I do? I'm so scared that the market's gonna crash. It's a bear market. So what? You know what? it doesn't actually matter. But in the meantime, whilst they're making this FUD, if you're not a trader, then it'll be scary. But if you know how to trade, you understand technical analysis to a degree. Even for my students, I don't think they have any fears whatsoever. I know they don't have any fears because whether the market is going good or bad, if you have the skills of trading, not just investing, you'll be able to make money from every situation. And this is why being a trader and having the skills of a trader is an asset. Okay. So with whatever Ripple is going to do, whether the company is going to fail or not, from a technical perspective, there's a reason why the price needs to get to 33 cents. So a good reason right now is upon us. We have, a so-called market crash, or the market is bleeding out at the moment. So it'll be a good opportunity for the price to get here. Now with Ripple, looking at the price action here, there is a D1 validation point here. If I go to the H4, the demand zone, or the lowest demand zone, is roughly around about here. And when I look at the price here, we may not even get the full return back up here. I want it, but if it doesn't happen, it doesn't happen. I'm just going to put the H4 demand zone here too for you guys to see. This H4 demand zone right here, we had the break beneath and the return. So the price it can literally go short from where it is right now. I want to put the H1 here just to gauge the price a bit more tightly here. All right, so here we are. So we've just had a spike back into supply, and we've had this similar kind of scenario where the price had that trend line situation here. And then after it's broken beneath, and then a small supply zone, then stronger selling. So they all seem to be looking similar, and I want to find out what we can get from the price. If it's going to pull back one more time just to give us that extra confirmation, or we're going to have to flip the zone. So since it looks similar like this, let me move on to the others and see. Now Monero, let's go here, seems to have had a bigger short. Now I would say this to you as my rule of thumb: if you want some advice, one of the keys here is that crypto is already scary to the powers that be, if you want to call it that. But cryptocurrencies that are to do with privacy and allow people to have control over their data are even more scary. So when this crash is happening, there is a chance where we might have that effect where, even though, yes, most things look to be set for another 50% drop, things like Monero may even drop a bit further because they might actually take the opportunity to whack, really uh grill those cryptocurrencies and try to get them away from people. Okay, so things like Monero, Zcash. That was just my thought yesterday in my own meditations, that we could actually see a bit more drops on some cryptos. Okay, like for example, some cryptos that have basically no utility or hardly any useful utility, like Dogecoin. Some of them have Dogecoin took a larger dip in price than many other cryptos. Even than Bitcoin itself. So sometimes that can happen. So when I'm watching Monero, I'm always putting myself in a position ready for us and all the students to make sure we can grab the opportunity here. And already the selling is a lot heavier here. So to get into Monero, we're gonna probably have to use some sort of flip zone. At the moment, is not the price isn't really giving us much, so I'd rather wait till 10 to see what the price is doing. But if worse comes to worse, the easiest thing we could ever do is just use the last order block. If you ever in doubt, just use the last order block to give you a shout on what the price is doing. The last demand zone before we had this kind of recovery on the price would be the easiest flip zone. So as soon as the body of the candle breaks beneath here, all we would need is some sort of confirmation and return back to this order block. Okay. I expect the price to validate on the algorithm this low right here for sure, because this spike here was definitely a liquidity grab or stop loss grab of people trading. Now that the price has returned here, if we get a validation that price wants to continue, then a body close back up somewhere here would be good for us to go for a short. So Monero, I'm not going to try to chase it, but I definitely am going to set an alarm here. So students, be ready for the price to break beneath here if it is going to go short the way we want. We need a body close at 1/8. Let's just call it 185 on the dot, and then a return. If we don't get the body close, we can't move. If it's a wick close, then we are still in danger of another reversal. But for sure, I'm looking for the price to give us a breaking close and then a return. Okay, back down to here. And Monero's targets, from what we discussed last time, let me go to the D1. With Monero's targets, I'm looking for the price to do some heavy drops. The first target is 122. If the price really is, available to do what, or there's enough liquidity for more shorting, then I'm expecting single digits back to about 100. I wouldn't be too greedy, and we shouldn't be too greedy, but this low right here, 107, pushing it down to about 93, which is the main target that we want, would be a great low. I don't know about anything less than that, but 93 would be good. That will give us about, from the projections, if it does exactly what we want, that's about 50 or 55 to 60% drop. And Monero, because the lot size is low, 0.01, if you do the calculation again, it only costs £1.49. Okay, now, of course, you still need to get your stop loss in order. But if I go back from where we were, if we did the same thing we did, so £4.8, and then we got to our target here, the full target would give us 1 to 20 risk to reward. The second target order, let's start from this direction. So we need the efficiency to be fulfilled here. When the spike happened from the crash, we see the price didn't return to demand, and there's equal lows nested beneath. Now, this demand zone has a very strong bit of bullish institutional sponsorship. So we know the price will come back here to fill it because we have unfulfilled price action here. It's not balanced whatsoever. So the price will come back down here for sure. So the first target short term would be 1 to 10, which is still great. Second target would be 1 to 15. Yeah, am I right? Yeah, 1 to 15. And then our third target would be, or intermediate target would be 1 to, let's do the maths here. All right, about 1 to 16, I think, or 1 to 17. And then the final target, which we want, is just below 100, is going to give us 1 to 20. All right. Now we could take the same effect that, of what Bitcoin is doing, but using Monero, and we can get some good extra spiking on the short side. Okay. If Monero does fail and is not accepted anywhere, then it might fail as a project, who knows? But at the moment, I'm seeing this more as a trader rather than just as a fundamental fundamental thing. Okay, so I would like to see what the price does there, and we should get some really good pushes. So Monero, keep that on your list, guys. I've got an alarm here. If we do get that, that's good enough for us to go for it. But I still want to see the D1 close here. The D1 demand close, anything beneath 200 or at least about $200 would be safe for us to say we have a break of this demand zone, because this one right here is the strongest one holding the price. If the body of the candle breaks beneath demand here, then we've really broken out of a very strong bullish area of bullish liquidity, so we can start to look for the short. So I'm hoping for this really much. So I might even set my alarm a bit higher right here, actually, so that we can be clear, because then we could get a better entry before the flip. The H1 flip is kind of like our last resort, but we want to get a better trade than that. All right, let me have a look at the last things, Dogecoin, and then we're going to switch over to the charts. I'm going to have a look at a few other cryptos to see the price points on those, and then we can make a move further forward. So let's have a look at Doge and see. Now, there was a beautiful analysis posted on Doge by Marlon. I love the analysis so much. Okay, I wouldn't, the Dogecoin, I always believed it was going to fail. I don't think it has the tokenomics, the correct type of community, or the correct minded community. It doesn't mean it doesn't have a community. Hear me correctly. Just the correct minded community, and the correct motives as to how it would, help society. At the moment, guys, no matter what's going on with this shaking, if you want to call it that, the cryptos that are going to help society for the next 50 and 100 years with real solutions are the cryptos that are going to last. It's just, you don't even need to, to debate about it. Is actually a fact. Any project that's stuck around, any company on the stock market that went through similar times to these in the early days, are still around because they provide value, or they have solutions, and we're working on solutions that actually provide value. Their main drive wasn't money. Their main drive was solution. Okay. Their main drive was capturing the next phase of technology. Like, I think there's even a documentary, ironically, is on Netflix, about how Netflix destroyed Blockbuster's business. I think in 1998, the internet was still quite fresh and young. Okay, and this concept of us being able to watch movies from home was even foreign. Blockbuster still had a big market share when it comes to renting movies and viewing movies. I remember going to Blockbusters, buying popcorn from the shop, then going to Blockbusters to rent out games and all sorts of different things like that. Okay, the concept was still foreign. It seemed unnecessary, it seemed like noise. But now today, Netflix is in everybody's home. Nobody can get away from Netflix. Right now, we have little memes and jokes about, when someone buys a Netflix, uh, or basically memes like nobody actually owns a Netflix account. They've just borrowed somebody else's email to watch it. Nobody really pays for Netflix and stuff like that. But still it's in everybody's home. It's in everything. It's even pre-installed into so many smart televisions. So these are the kind of cryptos we want to go for, things that are going to end up being pre-installed in smartphones and are going to help people, real projects. So in this time, nobody should be afraid. If you are afraid, it's because you're thinking about money and your mind is not in the right place. And if I can do anything to help you, I would say get your mind off of the money and think about the future and the project, because you will be laughing in a few years' time. Anybody that bought Netflix, even if it dropped 60%, who cares now? Even if you bought Apple when it was $2 and it dropped to $1, I would have bought more. If somebody could tell you anything in this time in this time period we are in 2021, or any word of advice we could give to someone in 1998 and etc., do not sell your Apple stock, because looking from here, you'll be laughing right now, even if you had 100 of those, because I believe one Apple stock is like over $1,000 or maybe even $2,000. I'm not too sure. I know Amazon stock is like 2,000, 3,000 something. But if you had 100 of those, you're worth more than half a million just for holding 100. And yeah, you have lost $600, $500, whatever, but it's the long term that matters, guys. Okay, so I'm saying that to say something like Dogecoin, I would only trade it for the fun of And you know what? Many traders in the past, before Elon Musk took hold of Dogecoin and started talking about it quite a bit, uh, in more recent times, Dogecoin was actually used as it was traded mainly because it had a very interesting pattern of a heartbeat pattern. Now, this isn't a teaching lesson, so we can't go through why all of that is, but Dogecoin had a very predictable pattern that many serious traders used to trade and capture the buys and the sells that happened because of the cycle of how Dogecoin was behaving. But now people are investing in Dogecoin as though it has potential to change human life, which to me doesn't make sense when there's many other projects that have real uses like Cardano and etc. So for me, with Dogecoin, I can only say, even if the market was to recover, I don't see how it's going to recover at all. I don't think Elon Musk is, I don't know, not he's been banned from cryptos or something, but I think it's kind of like a mutual agreement between crypto guys and Elon Musk that he'll stop tweeting about Bitcoin. He might still tweet about Dogecoin, but really Dogecoin does not have any utility whatsoever. All of this pumpy we see here when the price went from very low prices. I believe that Dogecoin last year was about 0.007 cents. So it did like 100x your money. So a lot of people did become millionaires, but became millionaires off of the hype of many. But I know people who were trying to buy Dogecoin at 70 cents, and I told them, please don't do that. Please don't. Just save yourself. Just trust me. Okay. And I'm sure they'll be thanking me now because their portfolio would have been really far gone. So with Dogecoin, looking at the price action here. Now we can't go that far back on the price feed. So what I'm going to do is I'm going to switch to trading view, and I'm actually going to go to trading view and pull up Dogecoin and pull up some other cryptos, and we'll end up looking at the Bitcoin dominance and what that means. Okay. So let's have a look at what's going on here. There is a piece of news which I believe is quite interesting for us to see at this time. And I'd like us to definitely have a look at what's going on there for sure, to see what we can grab from the price moving forward. So let's see. All right, I'm switching over. All right. All right, let's switch over to trading view. Here we go. Okay, so if I pull up trading view right here and I go to Doge, pull this up. So whilst we're waiting for this to load and everything like that, it's moving a little bit slow. But Dogecoin to me, as I said, I saw a post from Elon Musk is trying to work with the Dogecoin developers to produce it. Now, I'm not saying intrinsically any cryptocurrency project can, have, betterment. But I think Dogecoin, because it didn't start out for a means of something to develop, it actually started as a meme, is it hasn't got the capabilities to be expanded so easily. Okay. Now, for those of you who don't know the history of Dogecoin, okay, was started off as a meme. It started out by two people, two who are co-founders. The first co-founder left to continue with other stuff, and now the main guy or the other co-founder is still leading the Dogecoin community. But Dogecoin, okay, was kind of on the verge of dying. But what had happened is that the founder of Litecoin, okay, has the hashing algorithm that hashes out or allows for transactions to go out on Litecoin. They did an update and a joint venture, if you want to call it that, when every time Litecoin is mined on the Litecoin blockchain, Dogecoin can be mined or co-mined with it. So every time Litecoin is created, Dogecoin is created too. So miners earn Litecoin and Dogecoin. Okay. So Dogecoin be mined or being produced, first of all, as I said, the tokenomics of it, we have about 4 people who own about 70%, roughly, about of all the holdings, which is crazy already. And for any project that's trying to have longevity, that doesn't sound right whatsoever. If you want a community effort, then it has to be a larger spread among, many people. Now, number two, as much as Elon Musk is talking about, sustainability of Bitcoin, Dogecoin itself is a proof of work consensus system as well. Now, even though it's coal mined, so in I guess overall you use less electricity, but Dogecoin isn't the cleanest of clean anyway. Okay. Dogecoin still has let me get onto this as well. Dogecoin still has its own, let's use Doge versus the dollar, US dollar. I'll just use Binance. Dogecoin still has its own issues as well. It is still very slow. It doesn't have the ability for smart contracts to be put onto it, which will add immense value. And there's already other projects who started after Dogecoin and have a lot more utility and value. Okay, Dogecoin was designed to be kind of like a tip, so you can send someone a tip for services and things like that, but it doesn't really have enough utility to carry it forward. So what I would say, to me, I think that is a losing race unless Elon Musk is going to pour billions or call his rich friends to come in and help and turn it into something completely different. But for me, I don't see the value in Dogecoin whatsoever, and I expect the price to continue dropping even after this movement that we're seeing in the market of everything shorting off. All right, so I'm going to use Dogecoin from here. Now, this is why Dogecoin is so amazing to people, because in December, Dogecoin was, here we go. Dogecoin was right around about here. In December 16th, it was basically 3 cents. I remember this. It wasn't actually 3 cents. It was 0.03 cents for a coin. All right. And then it's gone all the way up to about 73 cents. So the X's on that are more than 100X. But all of this spike here and all of this movement here really just came from Elon Musk tweeting. So if a cryptocurrency is being inflated by not by the value of the system, but by somebody tweeting, then to me, it's not a good project whatsoever. Like, for example, Cardano, which is an absolutely fantastic project. He's just finished off making his first partnership with Africa to bring technology there, which is fantastic. But Charles Hodgkinson could tweet anything about Cardano tomorrow, but it's not going to cause Cardano to do these kind of movements of, basically from nothing to 100x. To me, that seems like hype. And I prefer tokens that have a gradual growth over time. But looking at this anyway, if I was to look at the price action from the D1 here, we have a better view. The next validation point coming up on the D1 is round about here at 25 cents. And we have a demand zone landing right in the middle of it. So I'm going to put this here. So we're going to still trade Doge, take advantage of the short action. But I don't want to personally own any Doge, and I never will own any Doge. Even if people have become millionaires, I've actually seen someone who is a friend of mine, his friend became a millionaire from Doge, but still it doesn't move me whatsoever. I believe that it's more important to be involved in projects that are going to bring history. I mean, you can actually use his millions to go and buy better projects, but I believe he closed out too. All right, so here's this demand zone right here. I'm expecting the price to get to 25. And then from here, we have probably one of the best price action, actually, despite what I think about Doge, for us to get a short. So I'm looking for a return back here. Hopefully we get a D1 stop on here. And from this price action here, I'm looking for a short. We have a very strong liquidity void. Now, no matter what market you're in, it's just how supply and demand works. When there's a very strong amount of bullish pressure, or what I would call institutional sponsorship, whether it's institutions or not, in this case, it's most likely not, because it's mainly retail traders. I don't believe any institution has touched Dogecoin whatsoever. I mean, Coinbase has listed it. They probably own some. I'm sure large companies do have some in their large exchanges will have some. Okay, but aside from that, this massive spike here, whenever there's a massive spike here, we have price imbalance. And so the price will need to fill this liquidity void based on supply and demand. All right, we had a very fast exponential move, which I believe the price will come back to. And this will lead to price getting back to, I believe, 10 cents and even 9.2 cents. Okay, so if we got a trade right here from 24 to where my first targets are, now I'm expecting the price really to bounce back at these highs right here of about 8 cents. We have roughly, just as an approximation, about a drop of 66%. Yeah, a 66% drop on Dogecoin, which would be fantastic money. If we put that into perspective, we'll look at the price of it, but dropping from here to here, I could switch back to this screen for a moment. If I went back here and I put the risk management tool in that we could use to assess the price action and pull this up here. If we started from where we are at 33, let's just give this as an example. We went from 33 to 23. So let's try to get exactly 1,000 pips. So we're close by. All right. So a stop loss of £5.61 will produce £72. Okay, or dollars. So that risk to reward right there is just about. Now let me see if I can change this horizontal line with the parameters. I want it to be exactly 100 pips below, so we can have a good round figure. So 23962. All right, so here we go. So the RNR approximately, if we do this as accurately as we can, 65 divided by 5 is 13. So we're looking at 1 to 13. So okay, I have to do this a bit better because it didn't go exactly 1,000 pips. Okay, I got it better. Apologies, guys. So roughly we're looking at about 1 to 13 to about 1 to 14. Okay, so 1 to 13 to 1 to 14 for about 100 pips. So if I switch back now and we did the calculation here, well, actually, I can actually use it here. All right, that same 60%, 66% drop will be as though the price dropped from $66 down to 22 to where we are. So let's do that. So get the risk management tool. Let's go up to 66. So we got 66,262. So if right here to where the current price is, I'm going to move this out of the way. So if we risk £11, we'll make £315. So we're looking at about 1 to 30 for that drop for about 66%. So if we get from 24 to 8, that will be one hell of a trade. And if we can get multiple entries, then we'll be laughing there. So this is what Dogecoin's potential is. And it might even drop even more. Because it's based on hype, there isn't much utility. If a lot of retail traders see that Dogecoin is crashing and that a lot of people are losing money, then there'll be a panic sell. And it might drive the price to even get to even lower lows. And I'm thinking of an overshoot price where the price may even get to 4 cents right here. And that will give us, an even larger drop. So this is what I would like to see on the price. I believe we're almost so close to it. Dogecoin's price action is probably the best out of everything I've looked at, despite what I think we have perfect scenario for the price to get here. So I'm going to be watching this 25 cents. If you're watching this, keep your eyes on 25 cents. Let's just call it, 25.4 cents. And let's see what the price does there. All right, so I'm keeping Dogecoin. I'm being prepared. We have a bit more time left. So I'm going to have a look at some other cryptos now. Going to have a look at Polkadot. See what's happening there. Now, in this market right now, I'm not going to be giving trades in the same way to be trading, but for these, I'm just looking at the price action to see what great blessings we can capture for these amazing projects, which are going to do well inevitably in the future. So DOT right now is in a good place, is inside of this D1 demand zone, a very crucial one, 15th of January. And we've just seen the price come for the low here. Now, similar to what we have with Bitcoin across all of the other pairs, they all have the same effect. This supply zone here was holding the price for quite a while. Now, for in terms of rebuys, okay, any time to buy any crypto is good. But what I would say to watch for, if I'm looking at the Polkadot, if the body of the candle was to break beneath, so if we had a body close beneath this demand zone, where we could see the prices get back down to really good levels of below double digits into single digits, 9 and 8, okay, and even down to the low of about 7. If it does do that, then that will be very interesting. For now, the price has got to a really good price point anyway. When we had this spike here, we got down to $13. All right. Now, to think about how Polkadot or what Polkadot is trying to do and what it has achieved already and what it's going to do in the future, this is very cheap. Okay. Even the all-time high is really cheap. Okay. To put this into perspective of what can happen with Polkadot in the future. So anytime, as I said, is a good time to buy. All right. But don't quote me and say that Mike said to buy right now. But all I'm saying is that watch out for this price section. If you want to buy now, we're in a very good buying area because we're in a very strategic area of demand. Now, we had unfulfilled efficiency here when the price took off. All right. Now, this was a very, you know what, and this is probably going to be controversial to say, when the price was going long, this bull run right here, from looking at it from a technical standpoint as a technical trader, the order blocks don't balance, they don't match. To me, it gives me more of a feeling that when the hype was going on in the early stages and institutions were talking about things, that they were just trying to hype up traders to get them to buy at high prices so that they could sell the market off and take money from them. Because when I see price action like this, we had a double bottom here, and this double bottom, I'm sure for many traders, was a signal to go long. And so this long that we see here, a lot of money coming in from retail traders. We had unfulfilled efficiency of the order block. We needed a return here and we didn't get that. And so it's not surprising to me that when this crash happened, that seems to most people it seems as a surprise, but it's not a surprise to me because the price action shows very clearly where price was going to go. When we look at the end of this spike before the first recovery, where did it spike back into? Into this demand zone. So the market order books had the opportunity to rebalance itself and reuse this area for demand. But because we're having these lower lows or these lower highs, forming right here, these lower highs gives me the picture that this supply zone holding the price is stronger than the bullish action from this demand zone. So even though we've got here, and this is why I'm not saying to buy just yet, I would say possibly wait, is that as the price has reacted in here, we haven't got a very strong burst of reversal price action straight away. The price seems to be hanging on here quite strongly. If I go to the H4, we can see right here on the H4, there's another supply zone and the price seems to be following the tune of this supply zone. Okay. And if I go even further to the H1, the reaction right here, this bearish candle right here, we haven't had that much of a strong reaction. And the other way, I would have liked to see a good burst maybe to 18 or 19 that would show, okay, there's quite a bit of bullish liquidity. We haven't had that. One day we will do. The price is going to recover. Trust me, guys. It's just a matter of time before it does. But hey, right now, this reactivity we had here wasn't strong enough to say, you know what, we're ready to go for a bullish movement. I believe we're still bearish. So I'll say if you wanted to buy some DOT, I believe you could get a very good discount beneath this price of $13, even down to 10 and below. Okay. This is what I'm expecting. And if the 50% drop happens as it should with Bitcoin, then we could see the price 50% of where it is now. So we're looking at about $7.50. If you could get Polkadot at $7.50, you know, when I look at this market, is almost like it's giving us a second chance. Okay. This bull run that happened caught many people, you know, didn't catch many people off guard. I believe on YouTube, everybody was saying the same thing. But this is why I warn, as always. No, I'm not putting down any YouTuber. God bless them. They're fantastic people. But if every retail trader, you have to think of it, guys. And as retail traders, you know, I maybe might one day call it the retail army. I don't know. But as retail traders, you have to understand that institutions will always prey on us. This is their aim. They always try to prey on us to get the better hand. You think they weren't watching YouTube videos? I know it sounds conspiracy theory type right now, Matrix, but you think they weren't looking at what, you know, what retail traders are saying? And almost 99.9% of retail traders, by the time we got to February, were saying we're in a bull market. So in a bull market like that, 99% of people are long. So what they would be doing was trying to find an opportunity to get everybody to go short and take money from them, because in order for them to make money long, then you have to be going short and vice versa. So for me, I'm not, when I see this price action here, if I'd seen this already, I would have given a better shout to say, guys, whatever bull run is going to happen after this is not the real bull run just yet. Because as you can see, it only took a matter of time from the 15th of May, literally in 10 days, you know what, 4 months of work is completely gone. If you had bought here and you were happy that your portfolio is, at 3x right now, in 10 days you'd have lost it, but it took 4 months to get there. This is how powerful or institutional money can have on retail traders. So trust me when I say we still have more to go. I want to see how the price behaves beneath this demand zone. This is such a crucial area to me. I would like to see the break and return. If we don't get that, then we're in a good buying area. But to me, these lower highs give me the gist that the price would like to push a bit further short. Now, I'm not expecting it to go to zero. Of course not. The lowest I think it may actually go to, as I said, is 50%. So roughly around about $7.50. We got the low here, or the demand zone, at $7.28, $7.03. If you went all the way back down to here at $5, man, buy as much as you can, because it's a once in a lifetime opportunity, and let the market do what it needs to do. Okay. But this is why the technical analysis is so important. So this is Polkadot. Let's have a look. I'll do link as well. Chain link. All right. We've got a minute left. And then I'll go through the Bitcoin dominance quickly, and then we'll call it a day. So I'll use link on, let's see. Let's just use Coinbase. It's cool. Okay. So on the D1 here, now I don't like the price action on my chart because the candlesticks are too thick. So what I'm going to do, I'm going to use the weekly, too thin, excuse me. I'm going to use the weekly first so I have a better picture. All right. So Link, we know, is not going anywhere. Link is an absolutely amazing project. Okay. If you don't know what Link is, you know what, there'll be videos about it. I really like the project a lot because it's one of those projects that are connecting one way of, or one realm of life to another, which is, as an oracle for real life solutions. Okay. We have some equal lows right here. So I'm expecting the price to go beneath 14.8. I expect the price to, now where it is at the moment on the weekly is in this price cap here. This is where the price is holding at. If we get a break beneath here, then I'm expecting Link to give us $12.50 at least. And if it wants to push any lower, I expect it to get around about $10. Looking at the price structure here, we have a lot stronger price action moving forward, a lot stronger price action. Now, the all-time high in 2018 or 2008 came a month after the initial pump on Bitcoin, and we had $1.46. And you can see that this $1.46, if I was to draw it across, if I was to put it right here, you can see the touches on here. It formed, to some traders, as they will see it, as a support level. The price, first it was a resistance level, now it's a support level, and the price has never come back there. So whenever we're doing analysis, and whenever I'm doing analysis for crypto, I always like to think as a retail trader, but trade as an institution. So I'll look at where support and resistance levels are most likely going to be, but do the opposite. So the next one we have coming up here is at $5, and above that we have a demand zone. So if I'm really pushing it, okay, where Link is right now is good enough for a buy. As a project, this has got immense potential. But what I would wait for, instead of trying to be fast with this, I would wait for the body of the candle to close here. If I see that the price has taken the low and is not wanting to reverse, then I'll leave it at $15. Next area I'll be looking for would be $12. If the price gives us more and the crash happens more, now if the 50% drop happens, if we divide 17, or let's just call it 18 by 2, then we should be around about $9, which is this demand zone. And if we're really pushing it, we're around about here. I would like to see if the price would like to fill this void here of this strong bullish run and come back and get back to this area right here, around about $5.26. Now that's really pushing it, but in this market, anything can happen. All right. I told you the topology of this market, institutions really want to get into these projects. Many of them are not. They're saying they are, but they're really not. Okay. And a good example of that is when Bitcoin had a massive jump when Elon Musk announced that they're going to. So a lot of people said, yeah, they've bought Bitcoin. They just said that they're going to, they're allocating this money to the portfolio to buy some, but they never look at what Elon Musk has been saying about Bitcoin right after. So do you really think he bought some? But because most traders are emotional and we follow the crowd of what everybody else is doing, everybody said, yeah, let's go and buy Bitcoin. You know, I didn't trust it whatsoever. But this is why we have to be more careful because we're not just fighting, institutions are not just fighting for them to have a cheaper price on an asset like a stock or something, but they're actually fighting for something deeper because blockchain means more. It's a actual new era of civilization. Stocks are not, they're just the representation of a new phase of technology, but this is a new era of life. Things like Bitcoin changing the economy. Stocks have never really changed the economy in the same way Bitcoin will change the economy because we have new stores of value that have never existed in since time began. This is different. Okay, so we have a fight on our hands, and I believe that governments are going to keep fighting to clamp down on this and really take, you know, try to get as many people out before the real enjoyment starts. So don't worry about it, guys. Hang in there. I'll go to the D1 quickly. It looks roughly about the same, but I would say looking at Link, I want to see what the price does around here. We still have a bit of chance to go for a short. Here's the demand zone I've been watching here. This demand zone is a very strong one. The price has been holding on to this since January the 21st. We've just had a very strong close 2 days ago, a very strong body close beneath that. So that lets us know what we need to know. The price is no longer in demand here. The demand holding the price for this bull run is gone. So we should be looking for more shorting action. If the price does pull back, there's a validation point at 19 and there's a supply zone above here at 20. If it does recover a bit more to 20, then from 20, I expect to short down, to these lows, 12 and beneath. Okay. So I would say right now, personally, for me, I'm not buying anything. I'm just watching the price as a trader. And I'm going to be making as much money as possible with the students and all my students to get more currency out of the market and turn that currency into more assets. All right, so let's look at the Bitcoin dominance and see where it is. So BTCD, I'm gonna have to click on all, otherwise we won't see it. There you go. All right, so positioning ourselves quite well for where we are. So as I said to you guys before, I already have some markings here. I would like to see the price get back to 49, but in my mind, guys, Bitcoin dominance for now is what we have because the Bitcoin dominance, as we know, this in simple terms, every time the Bitcoin dominance goes down, we know that money is leaving Bitcoin and moving into altcoins. That's the main phrase. But I'm saying to you that even when the Bitcoin dominance goes up or down, money could be leaving the entire market. So not just altcoins, people will be selling out. Now, speaking just a few people, most people are in the same phase as a lot of people that I speak to. What do I mean by that? Most people who have invested in crypto are here for the 10x and the 100x gains. They're not in there for the long run. So as soon as something emotional happens, then they're out. They're not trying to they're not trying to put their money back into Bitcoin as a store of value. They're not thinking that way because the education isn't there at the moment, sadly. Rather, what they're trying to do is just trying to close out their position and save their currency. One of the worst trades in the world right now is to convert currency, which fiat money, back into take your asset and sell it into a currency is the worst thing to do right now for the most part, because you're literally giving away, in my mind, you're giving away your freedom unless you're taking out profit to make more freedom for yourself in another asset. Right now, the worst exchange rate in the world is trying to sell any asset into a currency, but the fear of people and the fear of many people is that, you know what, I'm going to lose all the currency that I put in. All right. Now, of course, you don't want to lose all your currency. So people are selling out. There's no point of buying an altcoin because if Bitcoin is going down, then the altcoins are going down, etc. So at the moment, whether this is at 50, 47, actually doesn't matter too much. Okay. It could even be at 52, but if money is leaving the entire market, it doesn't really mean much at all. Of course, because Bitcoin has the highest market cap, a lot of money would, the most money would appear on here. So all I'm looking for really to say to what I'm saying now is that if the Bitcoin dominance does go up, okay, may mean that we have more altcoins liquidated because we can't see the true supply and demand unless I open up Glassnode, which we're not looking at today. Uh, you have to remember again with institutions that actually hold a lot of Bitcoin, like MicroStrategy, I believe they have 105,000 right now, Bitcoin, things like that. All of the Bitcoin they bought wasn't from exchanges; it's all OTC trading. So OTC trading so that it doesn't affect the market. Because so if all the institutions that actually own Bitcoin use the exchanges to do it, the price will be completely different. But for that reason, not to affect the price, but still be able to own the asset, they just simply, get people to source out um, people who own a lot of Bitcoin who are looking to sell, and they connect them with companies like, MicroStrategy who are looking to buy. And that's really it. So right now with the Bitcoin dominance, I do expect it to increase and money to leave altcoins. If this does go up, in my own personal opinion, I believe we'll see more money leave altcoins, which is good. Why am I saying is good? Because there's some altcoin projects that people are going to realize, hopefully, that these altcoins are useless and that they need to go anyway. And then a crash like this is like a good purging of all of the cryptos that are useless. Okay, so I'm expecting the next price point to get to, or the next percentage point, because this is not candlesticks that represent price action in the same way. I do expect the price to get up to 50%, and that's my personal view. So I hope you guys enjoyed that. Be prepared. All the markings will be out, so students, get yourselves ready. The alarms are set. If the price action does what it does, we get ready. But I hope that gives you some more insight. I hope you guys enjoyed that, and I'll catch you guys tomorrow, 6 o'clock. Take care.